All right, let's just get right into it. If you've been holding silver lately, you know exactly what I'm talking about. After that huge run-up, things have gotten, well, kind of quiet. It's this feeling of fatigue, maybe even a little suspicion. But what if the real story, the most important thing happening right now, isn't the price we're all glued to every day? What if there was one piece of data, something that the mainstream media completely overlooked, that just changed the entire game for every single person holding silver? That's exactly what we're going to break down right here. Because to really get what's going on, you have to look past the squiggly lines on the chart. We need to dig deeper, underneath the paper market, to see this huge structural shift that's building pressure in the physical world. And it all kicks off with this, a simple data point out of Chinese customs. It came and it went, and you probably didn't hear a peep about it in the financial news. But I'm telling you, it might just be the single biggest clue we've gotten all year. This right here, this is the heart of it. China, which is already the world's biggest silver user, just went on an absolutely historic buying spree. So let's actually look at the numbers. So in March, China imported a mind-boggling 836 tons of silver. And let me be crystal clear, that's not just a record for March. It's not a quarterly record. That is the all-time record for a single month, ever. And to really put that into perspective for you, that 836-ton number is 173% higher than the average for the month of March over the last 10 years. This isn't just a little blip. It's a massive, massive break from the norm. And you can just see it right here. Look at that difference. The normal average for March is just dwarfed by this new record. I mean, it's not even close. This is a fundamental surge in demand that just exploded out of nowhere. So here's the most important part. Why did this happen? It wasn't one big hedge fund making a speculative bet. No, it was two totally separate groups buying at the exact same time. First, you had regular investors who saw gold at record highs and said, you know what? I'm priced out, I'm buying silver instead. And at the same time, you had solar panel makers rushing to buy their silver inventory before a tax rebate expired. So you have a monetary driver and an industrial driver pulling metal out of the market at the same time. Now, to really understand why the signal from China is such a big deal, we need to quickly go over a core concept in the silver market. And that's the difference between the paper price and what's happening in physical reality. Just think about it like this. The price you see on your screen, that's the paper price. It's driven by super fast futures trading and algorithms. But the physical price, that's what a company like a solar manufacturer actually pays to get their hands on real silver bars. And those two prices can, and very often do, tell two different stories. And when they disconnect, you get something called a premium. For months now, physical silver inside China has been trading for more than the international paper price. That's a blinking red light. It's a sign that the demand for the actual metal on the ground is way stronger than the paper price is letting on. And here's the real kicker. This isn't just a story about China. Those 836 tons had to come from somewhere, right? They came from vaults in places like London, from the global stockpile. So every bar that goes to China shrinks the pool of available silver for the rest of the world. That puts a slow, building pressure on that paper price to eventually wake up and catch up to reality. Okay, so a huge record-breaking number from China is super interesting. But what makes it truly powerful is that it's not happening in a vacuum. It's part of a whole cluster of other signals that are all pointing in the exact same direction. Let's just run through them because this is where the case really starts to build. We have four big confirming signals: the gold to silver ratio, the trend in jobless claims, a wild new milestone in US government spending, and the momentum in silver ETFs. First up, the gold to silver ratio. It's sitting around 63-1, and history is just incredibly clear on this point. Every single time the ratio has been this high, especially when it looks like the Fed is about to change policy, silver has gone on to just dramatically outperform gold over the next year. Second, let's look at the economy. Jobless claims are starting to take up. Now, it's a very subtle shift, but it's exactly the kind of thing that signals a weakening job market. And that takes away the Fed's main excuse for keeping interest rates so high for so long. Third, and this one is just incredible, we've hit a fiscal milestone. The amount of money the US government pays in interest on its debt now costs more than the entire US military budget. That's not a temporary problem, it's a long-term structural pressure cooker for the dollar, which is historically great for hard assets like silver. And finally, just follow the big money. Momentum in SLV, which is the biggest silver ETF out there, is in the 91st percentile. What that means is institutional capital, the smart money, is quietly building up their positions, usually way before the general public starts paying attention again. So what do we have? A record-shattering demand signal from China, and it's being confirmed by a whole cluster of macro and market signals. So what does this all mean for you if you're holding silver right now? Let's get practical. Right now, I'm basically watching two main scenarios play out. The first is a bullish continuation. If the Fed starts sounding a little more dovish, a little less aggressive, I'd be targeting a move up to the $33 to $35 range. The other path is a short-term pullback, maybe driven by a hawkish surprise, which would likely test support back down around $27 or $28. So here is your checklist for the coming days. First, keep an eye on any geopolitical headlines over the weekend. Second, circle April 29th on your calendar. That's Powell's last press conference. And believe me, his language is everything. And technically, keep these two levels in mind. For the bulls, you need to break above $80. For support, you absolutely have to hold above $74. And let's just talk about the psychology for a second. This boring, sideways price action, it feels like weakness, doesn't it? But so often, it's the complete opposite. These are the phases where the market literally transfers silver from people who need a thrill every day to people who actually understand the bigger story and have the patience to see it through. So I'm going to leave you with this one thought. This data from China, this is the kind of signal that 6 months from now, people are going to point back to and say that was the moment things really started to change. So the real question isn't what the price of silver does tomorrow. It's whether you can see the signal for what it is while it's still buried in all the noise.